All right, well, thanks, everybody. I know a big part of this day for the folks in the room is networking, so I do encourage you to do as much of that as possible. We will have a couple of breaks during the day and obviously some time for lunch, so appreciate the sense of community here and the networking, but I do want to get on with the next program. For those online that are anxious to know the secret code word, and it is a spelling test, the word is apportionment. And there is no partial credit. If you can't spell apportionment, I'm sorry, no CPE, no CLE. So we're going to keep on schedule. Again, fantastic job with kicking off with our first panel and really sets the stage for the day. I know I do a lot of income tax work. I think of apportionment and I think it's all income tax. And until the very end of that first presentation, a lot of income tax. I thought they just about landed the plane right on the segue to the sales tax panel. But there's so much going on with multi-jurisdictional issues in sales tax. I want to turn it over to our adjunct, David Hillegass, to introduce the panel and to kick off the sales tax discussion.
All right, great. Thanks a lot, Drew. And yes, agreed. Fantastic job on that first discussion and presentation, leading right into the meat. So that was just the teaser. Now we're here to talk about what you really came for, sales and use tax. And keeping with the theme, we're gonna go with applying sales and use tax in a multi-jurisdictional setting. All right. So we're gonna keep the agenda pretty light today, right? You're here to listen to our esteemed panelists, not to me. So of course we'll do some panel introductions. Then we're gonna keep to two main topics. We're gonna talk about sourcing in a sales and use tax world, and then we're also going to talk about some audit and documentation, something that everyone loves. First, let's start off with some panel introductions. I can lead the charge here. David Hillegass. I'm a managing director at Global Tax Management, a corporate tax consulting services firm. I specialize in sales and use tax, as you probably have guessed. A little bit of relevant history for me. I graduated from Villanova with my MST a number of years ago, and now I'm an adjunct professor teaching a sales and use tax class for the past 5 or 6 years now. So, David, you want to introduce yourself?
Certainly. David Greenberg. I'm tax counsel for Home Depot out of Atlanta.
Hi, Jay Maschas. I'm the director of the Hearings and Appeals Division for the Comptroller of Maryland, and Villanova grad 2000, Masters in Tax 2007.
I'm Kate McKenzie. I'm a partner at the law firm Faegre, Biddle, and Reath, and I do a lot of sales tax and also a lot of unclaimed property, so seek me out if you have an unclaimed property question.
That's rare. All right, so let's kick it off with sourcing, and you're going to have to bear with me, right, to kind of level set with the team. I know a lot of people handle probably the direct tax side, so what I'm going to do is tee us up this conversation about sourcing from a sales and use tax perspective. So you're going to have to live with me talking for a little bit for 2 slides, and then we'll get to our esteemed panel. So when we're talking about sourcing, right, the real crux of the issue when you're sourcing from a sales and use tax perspective is determining the situs of a transaction. And what that is, right? What jurisdiction has control or taxing authority over the sale or purchase transaction? So put a different way, right? During a sale or purchase transaction, what country, what state, what local jurisdiction gets to tax or not tax that transaction? And when you're determining situs, the real issue that you have to do, what really comes down to is, how do you source that transaction? What is the sourcing for that transaction? And that's going to depend on a lot of factors. It's going to depend on what is being sold or purchased. It's going to depend on who is the seller. It's going to depend on who is the buyer. It's going to depend on where both of those parties are. And it's going to depend on how that transaction takes place. And we really come down to 3 different flavors of sourcing: destination-based sourcing, origin-based sourcing, and mixed sourcing. That kind of gives us, we answer that question of how do you source a transaction, we get to the answer of what is the situs of this transaction. And that first one, destination sourcing, that's what we probably all think of when we think of sales and use tax, right? How do you source a transaction? And it's where the buyer is located, right? The destination of the transaction. And that is by and far the most typical form of sourcing. It's used for 100% of interstate or intercontinental transactions, so between different states, between different countries. It's used for all of those transactions. And even within a state, intrastate, it's used for most transactions. But then you have some different flavors, right? Origin sourcing. Origin sourcing is based on where the seller is located, which is unique. This type of sourcing can only be used in intra-state transactions, and only a few states employ this, right? Some of the big ones are Texas, Arizona, Illinois, and the great Commonwealth of Pennsylvania, right? So if I make a sale from Villanova to Philadelphia, that sales situs is actually the state of Pennsylvania. It has nothing to do with Philadelphia. It's Villanova, right? Because Pennsylvania is an origin-based state. You cannot do that if it's from one state to another, right? So if I sell from Villanova to Annapolis, Maryland, the situs of that transaction is Annapolis, Maryland, because now you're crossing state lines, right? Interstate commerce. And then, of course, because California has to be unique, I have to put up there mixed sourcing, right? That's why no one likes California from a tax perspective. They have mixed sourcing, which is a combination of destination and origin-based sourcing, which we won't get into, but suffice to say, when you're selling within California, the county is based on the origin and the district taxes are based on the destination. And then, of course, for export sales, it is the situs of the transaction. The sourcing is the country to which you're exporting. Now, the sale has to qualify as an export sale, which there's a lot of rules around that, whether it qualifies as an export sale. But once it does, now the situs and the sourcing is an export transaction. The U.S. no longer gets to tax it. So when we're talking about sourcing, really what it comes down to is determining the hierarchy of sourcing. And you might be saying, Dave, thank you for going through all those origin, destination, mixed sourcing. I got it now, right? It's very easy to understand how to source a transaction. Well, if that were true, this panel wouldn't be here, I wouldn't be here, there wouldn't be a myriad of rules, admin guidance, and case law around the subject, right? Because when you get into the weeds of certain transactions, and some are simple, but when you get into the weeds of certain transactions, sourcing a transaction is very complicated, very difficult to determine what that sourcing should be. And so what the states have given us is a hierarchy that you step through when you have a transaction to determine the sourcing of that transaction. What I put up here is that hierarchy for the SSUTA, the Streamlined Sales and Use Tax Agreement, of which about half the states are party to. They're in agreement and they adhere to the SSUTA sourcing rules. The other half of the states give us something similar. And so if we quickly step through this, right, what you'll find is you go through, and it's in order, you go through this hierarchy whenever a transaction takes place. So the first step you do is, if the product is received at the seller's business location, so that's you going to Target and buying a toy, that's where it's sourced to. It's sourced at the seller's business location because you purchased it there. If that's not the case, right, when the product is not received at the seller's business location, then you go down that one step and you source it to the purchase location. And now everything else, except for the last catch-all, is sourced at the purchaser's location. But what we do is you have to understand what the best known address is. So for that second bullet, right, the sourcing is the purchasing location, the location of the purchaser that's known to the seller, which is the delivery address. So you go online on Target to buy that toy, you put in your delivery address, now Target knows that's where the sourcing should be, right? It's the shipping address, the location of the purchaser. If that doesn't apply, you keep stepping through, right? What is the best known address, right? And that might be something in, and we're gonna get into this, services, right? Now, these last three bullets are kind of the gray area where our panel's gonna talk about a lot, right? Because the first two are easy. We talk about the third bullet, if none of the above apply, now what do you do? Then you get into addresses that you know as a seller, right? That third step is the best known address. So this happens a lot in the services world. Notoriously, New York, New Jersey, they tax information services, right? So let's say that you're a seller and you're contracting with someone who has a headquarters in Chicago, but you're giving them an information service and you know it's gonna be used in New York. You know it's gonna be used there because you're working with a department there. You have to source that transaction to where you know that's gonna be used. And then lastly, from the purchaser's location, use a billing address, right? You could talk to your blue in the face about all these rules and regulations about how to source things, but when you put it into practice, it's actually very difficult. And that's why we're here today, right? To talk about putting it into practice. So when you get down these steps and you don't know any of those first three, you need something. You have to source the transaction somehow. So we go to billing address. And then lastly, if you know nothing And we see this happening a lot in like the digital product space. So maybe buying a video or a music download, when none of the above apply, when you don't know anything about the transaction, you actually source it back to the origin where the seller happens, where the seller is, where the sale takes place. And when we're talking about this, the situs, the sourcing, what you do is when that sale takes place, which is the transfer of title, transfer of possession or control, you need to determine when it takes place. And when that takes place, the receipt, right? When they're talking about receipt for determining sourcing, from a tangible goods standpoint, they're talking about taking possession of the good. From a services standpoint, they're talking about making first use of that service that you received. And then from a technology digital good perspective, it's similar, making first use or taking possession. All right, so now let's get into the meat. The reason why we're here, right, to talk to our panel. So sourcing of tangible personal property. You might think, as did I when I first started out, that sourcing tangible personal property is very easy, right? And the rule of thumb is you source to where the buyer takes possession. Simple enough, right? Well, we need to consider a lot of different things. Like, does a common carrier pick it up? Or does the buyer pick it up? Does an agent pick it up? Do we have constructive possession? Is there an export sale? So I think we're first going to pass it to Jay. And given that context, right, and given our ubiquitous world of drop shipments, logistical games, they're always coming to the forefront, right? They have been. What is Maryland doing, right, from a government perspective about constructive possession and where Maryland deems the sale to take place?
That's a great question, Dave. When I saw the panel on origin versus destination, I said, okay, how does Maryland law, how does Maryland laws fit into the schema of destination versus origin? Because typically when I had a sales and use tax appeal from an assessment, and I was looking through that and determining what was the right result on particular transactions, I would always refer to a series of statutes regarding, okay, where did the transaction take place? And I think of it, and I try to use examples for this presentation of, if I wanted to thank Drew Vanderbilt for asking me to present, and I said, I'm going to give him some Maryland crab cakes. If I walked into a store in Maryland and I purchased those Maryland crab cakes, the sales tax would apply at that particular area, even though I was bringing them out of state. But if I called up from an office and said, I'm going to thank this particular person and ship Maryland crab cakes up to Pennsylvania, and I did it by telephone or I did it by internet, and the destination of it was Pennsylvania, and it was being put on a common carrier, does that change the transaction in the sales tax in Maryland? And according to statute, if I did that via phone and communicated to the vendor that, hey, these were being shipped up, then it does. And then, then I started thinking about, okay, drop shipments. What happens in that particular area in constructive possession? Maryland is not a streamlined sales and use tax state, and so we do things a little differently as far as drop shipments and sourcing. One thing that really caught people post-Wayfair was our drop shipment treatment, where if you're a Pennsylvania online retailer and a Maryland resident purchases an item and it's from a Maryland company, you can't use a blanket resale certificate. You've actually either got to register with the state of Maryland, or that Maryland seller has to charge the Pennsylvania tax or require that Maryland tax to the Pennsylvania vendor. So this caught a lot of people off guard post-Wayfair. So we are really we've got a different set of schema and a different set for resale, which tends to capture the Maryland sales tax on those transactions.
Yeah, that's great. And going to your point about constructive possession, we recently tackled an issue for a client in New York where if you have and we found this out, that if you have a retail store in New York, like on Fifth Avenue, and a customer goes in and they make a purchase at the store, but they direct you to ship it elsewhere, right? At the store, you can direct someone to ship it elsewhere. That sale doesn't take place in New York, right? Because this possession, the constructive possession has not occurred yet. Instead, it takes place to where it's shipping to. However, if you go into that same store and you buy that same good as a gift, the taxability happens in New York. Because there is two transactions. You're taking constructive possession of the good That's that sale between you and the store. Then the second transaction is you then shipping it to the individual you're giving the gift to.
Yes. We've got on the opposite end, we've got a temporary storage exception. So if I went up to buy Stock's pound cake, because that's the best pound cake in the country, and then I brought it back to Maryland, I'm going to devour it, would owe use tax on a difference from what the Pennsylvania sales tax rate was versus the Maryland. But if I call my brother and sister-in-law in Texas and I say, listen, I went up to Philadelphia and I've got the best pound cake, Stock's pound cake. I'm going to go ahead, I'm not going to eat this, you're great host, I'm going to go and ship it. The temporary storage exception, because I didn't use it, even though I took possession of it, brought it back to Maryland, but if I had the intention to be able to ship it out to Texas, that difference between what the Pennsylvania sales tax charge and the Maryland use tax charge wouldn't apply to me, because I had the intention, didn't use it.
Agreed. And now I think we want to hear from David, right? You're representing one of the largest retailers in the country, right? Home Depot. How do you see this playing out from your perspective?
Certainly, and I'll preface my remarks by saying that I'm going to speak my own opinion, and these are not the opinions of my company. I'm sure everyone else would agree that they're speaking their own opinions here. So I think if we kind of begin, obviously, purchasing tangible personal property is, if you walk into a retail store, you buy an item, the tax is going to be sourced to that particular location. Where things get interesting, at least in my world, is most large contractors are not separating out their transactions on a project-by-project basis. And they're also not necessarily bringing massive trucks to load up everything they're going to need for those projects. So they're ordering it for delivery in a single transactions to all of their work sites. So this is obviously introducing a lot of complexity. So you don't necessarily have apportionment on an item-by-item basis, but that receipt might have sales tax apportionment built into it, particularly in border stores where they have people who are getting items delivered on the same receipt to multiple states. And this obviously introduces some complexity and confusion at the audit space because the auditor is going to look at the transaction, and that percentage is not going to make any sense to them, the bottom line. So it ends up becoming a major document game. It's making sure that you have those receipts tied to the actual orders. And then, in that context, things begin to make more sense. So you do have kind of a apportionment of sorts occurring on a transaction-by-transaction basis for larger contractors and other businesses that behave in this particular way, where they might have, 30 or 40 projects they're buying for at the same time.
And the answer to the question of what the sourcing is, what the site should be, might be clear.
Yes.
But logistically and practically implementing that in a system
Absolutely.
can be very challenging.
Very challenging indeed.
Mm-hmm.
David brings up an interesting point about the purchase of materials for construction. Maryland being so close to Pennsylvania, D.C., Virginia, and is it a sale of real property or is it a sale of personal property? Because in Maryland, if it's real property, the contractor pays the sales and use tax on the materials, and there's no charge for sales tax on the sale of real property. But if it's for personal property, it's a resale along the lines, and they charge the end user the sales tax. And so, bringing up like purchasing large volumes of lumber, and then saying, well, is this going to be for a personal property contract, or is it going to be for a real property contract? And then how do you bifurcate that purchase for use tax for projects down the future?
Absolutely, and the systems have to be complex enough to understand that if someone walks up to, we have pro desks in all of our stores. If someone walks up to a pro desk in, say, Virginia, and they're in person, they're working with their pro representative to build out the project listings for all of their projects in the D.C. and Maryland and Virginia. The system has to understand that these items, when they get shipped to Maryland, they're going to be subject to Maryland's laws because they're going to Maryland, as opposed to the Virginia store that they're in. It has to be able to kind of piece together what's going on from that perspective. It's a huge technology game.
Yes. Thanks to purchasing a fixer-upper, I'm now a Home Depot pro. Enough projects and a few YouTube videos, you can get to pro status at Home Depot. Yeah.
And speaking of construction, the reason that sourcing is so important is because you need to understand which state's laws you're under, right? You need to source that transaction because while most states treat construction the same, Texas notoriously is very different. So when you need to determine how you want to tax raw materials from a construction standpoint or how you tax a construction project, you need to know how to source it because not all states treat them the same. And speaking of sourcing, right? We're going to move to services, which services, if you go down that sourcing hierarchy standpoint, right, the rule of thumb is you source a service to where the benefit of that service is received. Kind of like tangible personal property. Just as simple, if you will, as tangible personal property. You source it to where you receive the benefit of the service. So for example, Kaitlin's team, right, they provide some stellar tax consulting services to you. Where are you, right? Where are they providing that service? And if you're just one department, one team with one location, it's pretty easy to determine. But if you're ubiquitous and across the country or across the globe, how do you source that, right? So when we get into services, it becomes very challenging when you talk about services like intangible services, personal services, admissions, amusements, professional services, information services, and data processing. Those last three are very difficult to source, right? Personal services might be easy to source, that someone coming to clean your house maybe. You know where your house is. Admissions or amusements, you know where that Broadway play is. But when we talk about professional services or an information service or a data processing service, where should it be sourced? So I know Kaitlin has a lot of experience in this, and I know you understand the law, the background, but logistically, how do you see this being implemented, right? Because it's one thing to know the answer, but it's another thing to actually put that into practice.
Right, exactly. When we were preparing for this panel, it made me think of a situation I dealt with a while back for a client. Iowa actually taxes bank service charges, and so it's not super well known. It's not sort of I think a unique Iowa thing. This bank had some locations in Iowa, and we're concerned about it. So the project started out as, what does this tax cover? How do we apply it? And so the bank service charges include things like ATM fees or withdrawal charges, and these are usually very minimal charges. And the tax covers any of these charges that are applied to a checking account. And so we really got into the weeds of the technicalities of this, and then we started talking to the IT department, and then the question became, well, how are we even going to source this? How are we going to apply this? You know, so there's the technical answer, and then there's the practical answer. So we went down the list of, if you're walking into a bank and you're doing a transaction there and the charge applies there, should be sourced to the bank. If you're walking up to an ATM and the ATM charge applies there, that seems like a seller location. Should the charge apply there? Secondarily, most of these charges are going to be sort of as people are walking about. You know, they're going to be mobile. They're going to be charges from your home, from your phone, things like that. How do we figure out where that is? And so the IT department was sort of running all these scenarios, and can we figure out where people are accessing their websites and their apps and all of this? And really, at the end of the day, it came down to all they could provide was the address of the customer, the branch where they opened their account. They literally just couldn't really get their systems to talk to do any better than that. So it was interesting. We sort of went through this very technical memo of how you should be applying the tax. And you know, the hierarchy slide that was up here earlier, we got down to the very bottom, and the very best that they could do based on the systems that they had was to apply the tax. They knew the customer, they looked at their checking account, and they looked at the branch where they opened it. Was it in Iowa or not? And so we sort of flagged it for, as you're doing system upgrades, can we do any better than this? And unfortunately, was just that was what they had to do in the scenario they were in.
Yeah, but at the end of the day, that's the right answer. Because if you step through that hierarchy, you get to best known address, unfortunately, right? Because you blow through the first three steps of that hierarchy. You're not purchasing at the seller's location. It's not being shipped anywhere. There's no delivery address, so you have to get to best known address, and that's what you end up with.
Let's see. For services, well, prior to this legislative session, our services, I think, for sourcing that you had was telecommunications, which is your address. And then number two, there was an interesting detective in security systems services and how do you apportion that. And I think it's like when you have a detective show or security service show up at a physical location, that's easy to source. But what happens if you have remote video sourcing? And then, if somebody in a different state is monitoring tapes in one particular location, and is that service conducted at the out of state by the remote, or is it by in-state? And we have a regulation on that as well.
Right, agreed. And these issues are ever present for services, and we're going to spend probably a lot of time here. They are very challenging from a technology perspective, right? Because in practice, or in theory, again, a very simple answer. From a technology perspective, you source to where the buyer receives the benefit of the service or makes first use. Very simple to talk about, right? But in practice, it's very hard because when we're talking about things that, again, I use the term ubiquitous, digital products, software, you have a multinational corporation that buys Microsoft Office. Microsoft Office has to charge tax. Where are they going to charge tax to? And how do they do it? So, David, if you wouldn't mind kind of setting the landscape for us in this technology area and kind of what the issues are.
Certainly, and our panelists know I have a lot of opinions on this particular area. Probably shouldn't have written as many emails about it, but yeah, so technology is just an interesting space, and this is really the bleeding edge of what's going on in the sales and use tax space. States are taking a lot of different opinions, not only on the taxability of product, like what is actually subject to tax, but how are we going to actually determine what the situs is. And last night, because I couldn't get to sleep, I decided to reread some of the case law, the historic case law, and discovered that sales tax doesn't deal with trains, it deals with buses. So if y'all recall, Jefferson Line is kind of probably the big case right now that we think about in the sales tax space, where Oklahoma wanted to assert a sales tax on the purchase of bus tickets that was at 100% of the purchase price. And the Supreme Court said this is perfectly fine. But if you read the dissent, which is interesting, their comment was, well, we've already decided this. And we decided that when you have a tax that's on, the tax base is gross receipts, it needs to be fairly apportioned. And therefore, a sales tax on something that will be used in multiple jurisdictions should also be fairly apportioned, because at the end of the day, it doesn't matter that the person responsible for paying it is the end user as opposed to the company. And since then, I mean, Congress stepped in and said, no, we're not going to let you do that to the bus industry. So the case hasn't really applied to that particular service. But there's a real question with some of the issues that you get in the technology space, whether they're going, the court will start swinging back over to the other side and start saying this needs to be apportioned. And you get a lot of technological problems that arise if you do go to that path. I don't know if y'all's firms and companies are like mine, but when I turn on my computer, when I log in, it immediately turns on the VPN. And what that VPN is doing is it is forcing all of my traffic through our corporate headquarters in Atlanta. So as far as my laptop, as far as Microsoft, as far as all these other companies are concerned, my computer never leaves that building. As far as they know, I'm still right now sitting in Atlanta, despite the fact that I'm here with you all. Maybe I'm a hologram, though. I don't know. So, I mean, that introduces a lot of complexity, a lot of problems that everyone's going to have to wrestle with when it comes to determining situs and potential challenges to the paradigms that we've grown used to.
Yeah, absolutely. Jefferson Line's internal consistency test, you should teach my class. That's week 2. So Jay, right, I think we'd like to hear from the government perspective, and this is very timely, actually. How is Maryland treating this sourcing of digital products and software?
Well, that's a great question, and this presentation could not, or my appearance could not have come at a better time. Just on last Friday afternoon, there was draft regulations posted on the Comptroller's website regarding the new, the expansion of the sales tax into data and information processing and computer applications. 2025 Maryland General Assembly, the legislature enacted a bill that as of July 1st, there will be a 3% sales tax on data information processing and computer applications on 4 different NAICS codes, which cover a variety of different applications and information processing. And I'd say historically, what I've seen for, I guess, sourcing for digital products was up until 2021, we didn't have a sales tax on digital goods in Maryland. It was all physical. There was a sales tax on physical products, and a lot of the audit questions and appeals questions were for software. Did you download this, or did you use a hard drive or physical media? Up until 2021. And and I don't mean to jump into audit documentation, but it was still the documentation issues were, hey, do you have an invoice that says this was downloaded, yes or no? And then in 2021, there was the sales tax was expanded to digital goods, and there was a bit of a back and forth about what digital products and goods actually entailed. And the guidance for tax tip number 29, eventually what the intention of the legislature was that it was supposed to cover, I guess, individual purchases, maybe songs, music, downloads of various products, capture that, and really only the, I guess, COTS computer software for individual buyers, but it didn't cover, I guess, multi-use, large computer applications. So the sourcing on that was, again, when we got back to our customer tax address, what was the buyer's address on that particular invoice, and then going down primary use, do you know where it's might be additional? But now we have a whole host of software products that are now subject to this 3% tax, and part of that legislation was the first-time use of a multiple points of use certificate. And it's codified that that's now allowed. Prior to that, this year's bill, we did not have the statutory authority to use a multiple points of use certificate. The vendor was required to charge the sales tax, on the entire transaction. So now we have a draft regulation on how to apportion that using this certificate, subject for comment, and I pulled that up and started reviewing it on Monday afternoon and said, I don't think I'm going to memorize this by Thursday's presentation. But there's quite a bit on that, and a lot of it has to deal with affiliates, subsidiaries. If you've got an apportionment of either employees or licenses, what's a reasonable methodology for apportioning them along the different subsidiaries? So there's a lot of ground to cover, and I'm glad there's usually about a 2 or 3 year lag time between implementation of legislation and when I see it in appeals. So I've got time to consider it.
Yeah, quite timely. Shocked you didn't memorize it by now, but
I was going to write it on my hand, but
yeah.
It was just too much, or I got small hands.
You mentioned audit documentation, and so I'd like to throw it to Kaitlin as a practitioner. Right, what are you seeing, kind of best practice, a state requiring from an audit documentation standpoint when we're talking about sourcing?
So I think it's interesting. It seems like over the, 15 years or so that I've been dealing with this, sort of back in the day, especially in Pennsylvania, you could get sort of a letter together for within the organization, specifically with software, what is the software, and then an allocation of, say, your employees, and get your IT director and maybe your HR director to sign that, and that could be enough. It seems like now they want contracts, they want usage agreements, sort of digging down different layers. And I think historically, if you were talking about some sort of software that was used generally within your organization, and there was a good faith argument that sort of everyone used it to some degree, you could allocate based on that. Or if it was sort of better for the organization to say, well, really only these types of, the sales force uses this software mostly, then you allocate based on that. So there was some play sort of to allocate based on how is best for you. It seems like now the states are being a little bit more particular, and sometimes the amount of data that they're requiring can be a little bit overwhelming. And I think sometimes it's sort of, the answer is very fluid, right? This is an art form, not a science. And so you're providing the contract, you're providing the usage agreements, but then sort of like David's example, if the organization is allocating people to their home office, which is very common, but people are working from home, what do you do with that? And it seems like sometimes you can really sort of go in circles on this issue.
Yeah, and practically speaking, right, a company, a seller of software or digital product has to make a decision, right, as to what the situs is. And when we're talking about digital products, that's why when you pull up your iTunes or your Spotify and you're making a purchase, I'm in Pennsylvania, right, I get taxed my 6%, even if I'm in Texas, right, and I buy a movie in Texas, I still get taxed 6%. And the reason is because of that sourcing hierarchy. They're going down that list, and the best known address is my billing address, right? Now, they could use my IP, but they might not be sophisticated enough to do that. You know what I mean? And a VPN's come into play, right? I could tell them that I'm in India, in which case, now they're not going to charge me any tax, right? So that kind of thing is pervasive, especially digital products, right? That might be for individuals, right? But when we're talking about large companies, it's big dollars for software. That Microsoft Office license, that SAP license, that Oracle license, it's massive amounts of tax. And if the best known address they have for you is Pennsylvania or Maryland, and it's not California, then they're going to tax you the full 6% on that entire $1 million contract that you sign with them, right? When in reality, if you were in California, you wouldn't get taxed at all. So it can become challenging.
And that's a really good point. I should have prefaced my comments by saying, if you don't work with the vendor to get some sort of allocation that fits, that's acceptable to you up front, you're going to get these charges. And I was sort of talking about trying to fix it after the fact. So then you're going through the appeals process and you're talking to Jay and trying to explain why the original amount that you ended up paying was not appropriate.
Yes, I mean, I'm thinking back to when we had our appeals of was this downloaded or was this physically transferred, and the gold standard was, hey, do we have an invoice that says, here's your purchase price, here's what it was, downloaded via this, and then a lot of times it didn't have that on the invoice. So then how do you back yourself into proof of that, hey, this was downloaded? And then I said, well, do you have anything like emails at the time? Bob from IT, hey, we're going to purchase this, this is going to be downloaded on this particular day. Like, do you have emails from that? Or do you have affidavits from the vendor saying we only do this? There's no way to actually physically do that. And then we got into our digital products and goods in 2021, and the question was, well, was this for single use, which would be subject to sales tax, or was this for a multi-use setting in a business? And it took a little bit, but the invoices were like, hey, we have like 100 different licenses for ABC Corporation. This is obviously not for single use. And so that became a little easier. Now we're jumping into the foray in Maryland with, how do we allocate employees, or how do we allocate licenses, and what proof is needed? What are regulations going to state as far as acceptable proof? What documentation do you need? And then someone brought up just very recently, well, what happens if you purchase 100 different licenses and you've only got 80 employees at that particular things? What happens to the licenses which are not being used by any employee in any different state? Or hey, you've got a total number of employees that are going to be using this versus employees in the state of Maryland and licenses and your apportionment factor there.
Yeah, the phantom licenses, right? That just, they go nowhere, right? You just want them in your back pocket for when you hire someone new.
The throwback.
Yeah, yes. Exactly. Kind of getting into income tax concepts. Because we have to remember, right, that software, the rule of thumb is it's sourced to where the user is. You could have 1 million users of Microsoft Office, right? So you have to source it to where the user of that software is. But as Kaitlin mentioned, as we've mentioned, where's the user? How does the seller know where that user is, right? And a lot of times they don't, but the buyer typically does, right? And so the onus kind of falls to the buyer in those circumstances. And we've been talking about audits a little bit here. We've been weaving them in. So let's kind of make that official. I might get this question 2 to 3 times a month. What is the likelihood that I'm going to be audited? And I don't want to tell you the circumstances under why I'm being asked that, right? But a lot of clients will ask me, what is the likelihood that I'm audited? And the reasons here, I've put up the 3 general reasons, right? And it's, you have a large physical presence in that state. You might have a headquarters there, a manufacturing plant, a warehouse. You have a large physical presence in that state. There, you have a higher risk factor to get audited, right? And that's because of your purchasing activity. The hot topic now for audits is use tax, right? They're going to look at all of your fixed asset purchases, and they're going to sample your expenses. And the best bang for your buck is if you have a very large physical presence there. The other way to get audited in the retail space is if you have a high volume of either gross sales or tax volume, right, of tax liability, in which case you might get audited. If you have a high gross sales volume and low tax, they're going to make sure that you have all your exemption certificates. If you have high gross sales and high tax, they want to make sure that you're doing it right, right? Because at the end of the day, it's a calculation on their part, right? They don't want to send an auditor out, waste 9 to 12 months of their time, or 2 to 3 years of their time, and not get anything from it. And then lastly, and this is an interesting one, if you as a seller are continually popping up on audits as a negative item for your customers, you might get audited. We had a technology-based company where the Texas auditor shared with us that the reason that our client was selected for audit was because their buyers were being audited, and a bunch of my client's invoices kept getting ticked off as not charging sales tax correctly. Enough of those, and they're going to go right for the source, which is you, the seller, not doing it correctly. So with that in mind, right, and we talk about audit issues from a sourcing, from a sales and a purchasing. Oh, yeah. Go, please. Yeah, that's an automatic audit. Yeah, yeah. Especially if it's a high enough dollar amount. That's a good one. But yeah, when we're talking about audit issues, and a lot of this comes around sourcing from a sales and a purchasing standpoint. You have to source those sales because when the auditor comes, they only care about their own state, right? They want to see, I want to see Pennsylvania sales. I want to see Texas sales. I want to see Maryland sales. I want to see Maryland purchases. I want to see Pennsylvania purchases. That's what they want to see, right? But when you're giving over this information, this documentation to the auditor, they're asking you for their purchases. We've found that more sophisticated states now, they don't just ask the question, let me see your Pennsylvania purchases. They say, let me see all of your technology purchases because I want to make sure you're sourcing some of them to Pennsylvania, right? So given that, Kaitlin, if you put your state hat on, right, for a second, what do you tell a taxpayer? What do you want to see from a taxpayer when you audit their taxes and their documentation?
Yeah, sure. So I think at this point in my career, I have a much more sort of even view of sort of what's happening when you're dealing with audits and appeals and that sort of thing. So I started out as a state tax practitioner. I served for a couple years on the Philadelphia Tax Review Board, and right now a very large portion of my practice is doing VDA testing for the state of Delaware for unclaimed property. So I've sort of seen all different sides of it, and I think when you start out just on one side, or if you've only spent your time on one side, you sort of have a skewed view. And I think really all sides are trying to get to the right answer, and I think the thing that's most important is consistency. Like David's saying, if you are taking the same position around the country and you're able to show that, it gives a level of comfort to the state or the appeals officer or whoever you're dealing with. The worst situations I see, especially now in the testing I do for Delaware, I'll just weave unclaimed property in for a moment, is if someone's saying, well, we're gonna take this position in Delaware, this is what we're gonna do. Well, show me what you're gonna do in the other states. Put that in a management rep letter that you're gonna do the same thing. And if they can't do that, that really raises your concern level. So I think being open and honest and consistent with whatever your position is really the baseline.
Yeah, and from a sales tax perspective, oh, go ahead. Yes.
Yeah, so Kaitlin, question, very good conversation. So about the allocation, you mentioned you cover all these things regarding, easily you can allocate, but like when your customers are using some product that, you have like software that like DocuSign, if your customers are using, how you are allocating that? And second question, the revenue-based software, you are not bound to have quantity. So how you allocate that?
Like, is the question from a seller side? How do you do how are you allocating?
So it's like not seller side, from the purchaser side. Like, you are used, like, let's see, for the revenue based, it's like Oracle. When you are company, it's not like your revenue is big, but you're not going to use that much. How you going to allocate that? And also a DocuSign, one of the example that customers are using, they are using from where they are not located, but they are in transit, they are using it. So how are you going to allocate that?
Like you have a license and you're trying to figure out. Yeah, I mean, I think it's really, it's an art more than a science. It's sort of who's using it and what's the best information you have. What are their offices that they're allocated to? Do you have better information? I have seen some clients where they have IP information where it's just a little bit more accurate. About who's using these different programs and where. I don't know if there's sort of a great simple answer for you. I don't know if anyone else has.
Not to mention every state's going to be a little different of what they're going to be willing to accept when it comes to that sort of thing.
Yeah, PA is challenging, but to answer that question, what we find, and to piggyback off of what Kaitlin was saying, you got to marry two departments to get that answer. It's IT and HR, because what you need from IT is the user listing, right, of individuals that are using it, and then what you need from HR is their location. And again, you go down that sourcing, best location, right? I know a lot, post-COVID, we're all, remote hybrid, but what does HR has as your location, right? Where am I mapped to? What office am I mapped to? So you kind of got to marry that data, and as long as you have it, and as Kaitlin said, as long as you're consistent, right, a state should be amenable to that. And going along those lines, right, if we talk about audit documentation, this is what you need, right? And it's very detailed information. From a sales and a procurement standpoint, transactional level detail, customer details, contracts, user listings, all the like. So from a governmental perspective, right, what would you tell someone the ability to produce certain types of documentation, right, to the question? Because the perception is that the documentation is easy, but it's not always.
Yes, I mean, there is the perception in particularly the tech world, that, hey, if you're a tech company, should be able to produce any particular set of documents at any particular time to be able to, manipulate. I wouldn't say manipulate, but be able to create lists or create the particular, certain things in any particular format if you're a high-tech company. I mean, certainly from our brick-and-mortar companies, things remain in a certain way, have a point-of-sale system, and those are static. But there is a perception of more complicated that a particular company's transactions are, or more high-tech that they are, that they should be able to be available in any format. And I have had gotten responses that, no, Jay, just because this is a technology company or it's a computer software company doesn't mean that this particular document or this particular set of information is available in the format that you wanted in that particular fashion. And so there's that constant interplay between the government and I think companies that say, well, you sure you've got to have it in this format. I mean, you're the masters of the universe. This could be able to in this availability. And so I have gotten those responses, and I have gotten taxpayers that say, well, give me a little bit, and we'll see what we can do with and see what we can play with. And those are the conversations that I've had. And, going back to, was this downloaded or was this, transferred in physical form? What's the end of the line? And what conversations that I can bring in? Is there something else that I could say that more likely than not this happened in a particular way, or given these particular set of data, do you feel comfortable that this was sent into this particular state or Maryland?
Yeah, and that's. Oh.
It's the exercise program.
So Jay, question. I think as we've gone through all the hierarchies and everything like that, that all makes sense of, but we've got states that are SUTA, we've got states that are non-SUTA. Mm-hmm. So when we get to the point of everybody has a little bit different idea of how to apportion services, digital goods, all these other things at that point in time. When you're looking at that, how much do you think, and this is kind of a question that came up in the first panel, do you take into account that you could potentially source more than 100% of the transactions in multiple states at that point in time? And we're really putting the company's seller and purchaser at a disadvantage at that point, since we don't have a uniform way of doing these things across the states. SUTA works great, but Pennsylvania's not suited. So how many other states aren't suited out there, right? And so do you take that into account when you're dealing with somebody to say, I could potentially, applying my rules and applying some other states' rules, we could end up with 110% apportionment across these services across these states?
I have had that argument before in appeals, where based on, more often in the income tax arena, but sales tax, and I'm thinking about, sourcing of security services, destination versus origin, and I'll say in general, what matters is what the Maryland statute states is apportioned to Maryland, and I'll simply go with, on that particular item, I understand the argument, but if the Maryland statute says, hey, this is what's apportioned for sales tax, even though there's going to be a disparate treatment between SUTA and a non-SUTA state, it is what it is. If there was something an underpayment, then it's a reasonable cause for interest and penalty on that particular case. Honestly, I've had the rare instance for sales tax and apportionment, but more often comes in income tax.
That's great. And so that's governmental perspective, right? And that's that's what everyone wants to hear.
My personal experience in appeals, I'll couch that there.
No, it's fantastic. That's what the people come for. Industry perspective on this topic, David.
Yeah, so when it comes to audit documentation, it's really a collaborative effort, which I think is what we were talking about earlier. Obviously, you want to make sure all of your sales tax system folks are in the room whenever you're talking about documentation, the folks that are managing your sales tax engine. But you also need to have IT. IT is a huge partner. And depending on the size and complexity of your IT department, there may be different groups within your IT department that need to be involved. Obviously, for the sales side of things, the teams that are going to be creating and managing your POS systems and other ordering platforms, including your online, need to be involved. But then on the use tax perspective, and sometimes also in the sales tax perspective, you need to make sure your cybersecurity folks are involved, because your cybersecurity folks are going to be able to tell you what type of information is being collected on the various computer systems that will allow you to do some of these kind of apportionment work that we were talking about a few moments ago. Are there VPNs collecting logs? What type of information is in the logs? Is it something that you can actually access? How long is the data kept for? Most cybersecurity folks will tell you that they don't want to have logs for a long time, because that information can be used against them for cybersecurity issues. So they want them to be there for a period, but maybe not as long as a sales tax auditor would want that information to be there for a use tax audit. So there's a lot of key players. The other one is your legal department, because they're very sensitive to potential risks to your business. They're the ones that are concerned about how legal risks could negatively impact the long-term future of your company. And while they may not be tax people, they're definitely folks that understand risk really well, and they hopefully understand litigation really well and what the negative impacts of litigation. So they can be great partners to try to convince folks that may not want to put a project in place to improve a POS system, to make it a little bit better for audit. They're the ones that can actually put a little bit of muscle there and say, look, we have to do this because of XYZ reason. This is a legal concern as much as it is a tax concern. So,
You mind if I interject with a couple of online questions?
Please.
Thank you. One, there's never an easy question, but we'll start with this one. What's your thought on large companies, using a quote reasonable approach for sourcing, where there's multiple users, and trying to maintain a consistent approach across the state? So the practical question.
Yeah, and that's a good one. And I think, Kaitlin, you're probably best to answer that, given that you've worked on both sides of the coin, right? State and industry perspective. And if you could kind of and it'd be wrapping up with a bow, what Jay and David talked about from a documentation standpoint?
I think, I mean, I like to use the term audit roulette. It's sort of, you know, you're playing the game, and it depends on how material these issues are. I mean, sometimes, especially like the bank issue I had talked about, it was something that they wanted to get right, but it was not a lot of money at the end of the day. So the amount of resources that they were spending on trying to sort of do this, and I think they felt like this memo capped something that they could give to an auditor that showed that they made a good faith effort. And so I think it really depends on how material it is to you and what sort of audit risk you're willing to take.
We're 2 hours into this, and I'm going to say AI for the first time. So we have a question, and then somebody can explain that to me. But have you seen the use of AI in terms of assembling documents for refund claims, or really for any other purpose and documentation? Does that come into play?
Absolutely. So at our firm, we use AI Copilot specifically, which is the Microsoft product, to help put together documentation. And of course, the documentation for audits, especially with sourcing technology, comes a lot from IT, who is best suited to implement situations where IT can be, where AI can be appropriate, right? And so what you can do with AI, and what we've done is, a lot of this stuff is narratives, user listings, documentation. So you get that AI app in that meeting that can take the documentation for you. Now you have a narrative that your director of IT can sign off on and provide to a state. You can ask your AI tools to create these user listings, to marry the user listing from IT and from HR. So yeah, we've seen AI being used to create the backdrop for the documentation, but also to create, when you submit a refund request, you need some type of narrative, right? Whether it's a half a page or a page, right? You need a narrative. And you can have AI do that first draft, right? Which we use for the first draft. But then you need human touch, right? That's why we're all sitting here. That's why we get paid to do what we do. You need to then look at that AI. That narrative, that stuff that's produced by AI needs to have human eyes on it, at least for now. I'm sure in the near future I'll be replaced.
I'll jump in real quick just to say, you know, AI, we were thinking about modern AI, you know, the type that generates content. But AI is also just any sort of machine learning at the end of the day. And I'm sure a lot of folks have been using different machine learning tactics, we certainly do, to go find the receipts. You know, you're not sending folks to Iron Mountain to go look through all of the print receipts anymore. I hope not. We certainly don't. That would be basically impossible. So we're using a machine learning tool to go into the digital side so that we can, you know, look, these are the parameters. Now go find the receipts for me. And then it goes in a couple days, you know, the receipts appear in your, you know, the particular drive where they're going to go. So there's been automation tools, machine learning tools that we've been implementing over the years. And as these new tools become more sophisticated, they'll be able to do more things with those same prompts. So.
And Brian has a question, and I know we're bumping up against time, so I want to give you time to go back to your wrap-up.
Thank you, Drew. Yeah, so through the lens of technology apportionment allocation, I wanted to get your thoughts on, so for like general exemption certificates from a seller side, you'll have a good faith standard in which you can accept that. Is there, I'd be curious from if a seller is receiving an apportionment or allocation direction from a purchaser, is there an added level of scrutiny, or do you see states imposing a similar good faith standard of a seller being able to rely on that apportionment allocation, or is that something that's just more of an auditor's discretion?
Yeah, and I can start with that because we've seen that typically and historically just that page certificate has been good enough, right? Pennsylvania changed their certificate recently to allow for an allocation and apportionment of technology. But recently, though, New York has a similar one. There's just 2 or 3 pages. Now New York, though, for audit documentation, they want you to attach a list of users of that software, right, to that exemption certificate. We've seen under audit saying, hey, this isn't good enough, right? Because when we're talking from a sourcing perspective, New York and New Jersey, next door neighbors, and everyone wants to source, like if you have a big office in New York, you probably have a big office in New Jersey. Everyone wants to source their technology to New Jersey because they famously exempt software, right? They exempt software as a service, they exempt digitally sent software to businesses, right? So you want to source to New Jersey, and New York knows that. So they are getting very strict with that audit documentation. But typically, it's just that signed affidavit from the company is good enough.
Maryland's draft regulation that was published on our website on Friday requires more than a one-pager. Yep. I'll just make that highlight. Yes.
I'm excited to read that.
I wish I could go further in there, but I didn't write
It's
all the
very
rules in my head.
detailed.
Yes, it's very, very. No,
I know
it's detailed.
I know we're up against time, right? So I guess I could just wrap it up by saying, make sure you source everything to Delaware.
Nothing like tax humor. So thanks so much for the panel. Let's give them